Hello, hello. I'm Morris Henderson with Mortgage Resolution Advisors, and my business partner, Mark Guerra, unfortunately couldn't be here today. He's out there helping many people, as all of you have seen on our videos. But today, I wanted to take this time to introduce to all of you a special guest. Now, this special guest is one of the top real estate attorneys of today, best-selling author, and most importantly, he has helped so many families in different communities in real estate for over 30 years. I'm truly honored to have him here today because I can remember telling him about what we wanted to do and our passion for helping people. So now he is considered to join us and talk about the things that he's done for so many families in different situations when it came to their mortgages. So it's my pleasure. And without further ado, this is William Bill Bronchick. How's it going, Bill?
Going awesome. Thank you so much for inviting me. It's a pleasure to be here.
Oh, definitely, definitely. I am just truly, truly honored to have you here. And thank you so much again for being here. First off, let me just, tell our viewers a little bit about yourself. How long have you been practicing law and, what states do you practice in?
I graduated law school in 1990. It was 30 years ago, and I've been practicing law ever since, and been admitted to the bars of New York and Colorado, but most of my practice has been in Colorado where I live now. And I focus on real estate, residential and commercial, particularly creative transactions for investors, foreclosures, subject tos, lease options, et cetera, et cetera. I also do business transactions, buying and selling businesses, estate planning, and asset protection for my business and real estate clients.
Wow. Amazing. And I know you were mentioning subject to, so guess what, Bill? Today's hot topic, because we love to say hot topics here. Today's hot topic, we're actually going to be talking about subject twos. So for some of those homeowners, or for most of the homeowners, they probably don't know what is subject to, but I wanted to go ahead and give a little bit of elaboration, and what better way to have somebody that is so passionate about helping people as much as we are about explaining what is the subject to existing mortgage. So why don't you tell everybody what is the subject to the existing mortgage? What does that mean?
Well, the short answer is subject to the existing mortgage means you transfer title by executing a deed from seller to buyer without paying off the existing mortgage, but by the buyer continuing to make the payments. It's not an assumption. An assumption is where the buyer calls up the seller's lender and says, put me on the hook, take him off the hook. That's different. You have to qualify for that. And if you're an investor in particular, you're not going to be able to assume a loan that was designed for a homeowner who's going to live there. So that's not an option. So in most cases, buyers who are investors are going to buy subject to, although you could certainly buy a house to live in subject to. On my first principal residence, I bought that way. And I bought many since then exactly that way. It's a great opportunity. So whether you're an investor buyer or you're looking for a home to live in, this is a great opportunity to buy a home where you don't have to qualify. You don't have to put a lot of money down, if any, and you don't have to necessarily use your credit in order to buy a house.
Wow, Bill, that sounds this very powerful. So basically, you could take over someone's payments. Bill, okay, is this legal? Is this legit? Can this really be possible?
Absolutely. There's no law in any of the 50 states or in the federal code that says you can't do exactly what I just described. Now, every mortgage, I'd say 99.98% of mortgages, your standard Fannie, Freddie bank mortgages, contain a provision that says if you do what I just described, which is transfer the ownership without getting the lender's permission, without assuming it, without paying it off, the lender has the option to accelerate the balance of the loan. It's also known as a, quote, due on sale clause. It's not really due on sale. It's due on sale if the lender chooses to do so.
That's correct.
And the lenders really don't do anything in this environment. A little history back in the 70s and 80s when interest rates were skyrocketing over 10%, 12%, 14%. If you had a 4% mortgage and you did this, of course the lender is going to accelerate it because they want their money back so they can lend it back at 14%, not 4%.
Right.
So fast forward, from the early 1990s when I started practicing law and doing real estate investing, interest rates have been pretty flat since then. They started in that range about 6 or 7, and they've gone down now as low as 3 or even below. So if you're going to take over someone's loan that's 4% interest and market rates are 3, why would a lender push that issue? And experiences bear that out. in thousands of transactions involving, taking over mortgages subject to for myself, for my clients, and for a variety of other people.
Mm-hmm.
I've only seen 2 cases out of maybe 1,500 where a lender made a mistake, and it was a very unique circumstance in both cases. So the odds are, better than COVID, that you're going to survive this. It's not illegal. It's just a contractual right that the lender has. Say, no, you can't do that. You got to pay it off. And it's not a contract between you and the lender. It's a contract between the seller and the lender.
Right.
So you're not breaching anything as the buyer. Technically the seller, he's not technically breaching the agreement because the mortgage agreement puts no affirmative obligation on the borrower to tell the lender he's doing this. It just says, if you do it, then we may. And just practical experience, the lenders just don't care. A few exceptions to that, but for the most part, 99.5% of the time, you're going to get away with it, and it's not going to be a problem. And if it does happen, you could either sell the property or finance it, or, maybe ask the lender to assume it. It's a lot of options.
Okay. Fair enough. So based on everything, you can't really go to jail for something like this. No.
Go to on sale jail.
Absolutely. Okay. Well, that's good to know. Bill, I have to ask, because, with your knowledge and everything, it's just remarkable. But, how many families have you helped taking over their mortgages? Just estimate. How many?
Over 100.
Awesome. That's a lot. Probably more. I think you're being modest.
Probably more, but, also I'm an attorney. I also own a title agency. So, the number there, is more like 1,500.
Okay. So quite a bit.
And other people that I've helped, and other clients and closings and buyers and sellers. And I said, I've only seen 2 times where a lender made a stink, and there were very unique circumstances that actually worked themselves out.
Okay, great. So basically, just based on the amount of help that you've given to so many, there's really no limit to how many families out there you can help with this process, right?
And it is helping. The typical seller who's going to do this, because some people watching might say, well, what seller in their right mind would let you take over their ownership to their property without paying off their mortgage? Because if you don't pay it, they can get foreclosed, they can hurt their credit, and et cetera, which is all true.
Right.
If the buyer doesn't perform. Typically, it's a seller out of options. The property's worth $300, they owe $290. There's not even enough room for a realtor commission. They're 3 payments behind. They're facing potential foreclosure. And they're just throwing up their hands and saying, I'm going to let it go and let the bank have it. And as we all know, that ruins your credit for a number of years. So if you take a loan out of being in default and make up the back payments and continue making them forward as the buyer, you're helping the seller by saving their credit from potential foreclosure, and you're improving their credit because you went from a loan in default, delinquent, to now being current.
Okay. Wow. With these type of strategies and things that I seen that you have been mastered at, are there any other attorneys out there that are just as intelligent with this process like you are, understanding this subject to process, and could they close on the deal? Or I know you mentioned a title company, or would they have to use a title company?
Well, it depends what state you're in. In states that commonly use title companies, I'd say probably 9 out of 10 title companies won't do it. Without getting the lender's permission, which defeats the whole purpose of this. But that's okay. You only need 1 title company to do business with in your town. In California, for example, they use escrow companies, not title companies, to close. And more of them are a little more flexible about it and will do it. In states that use attorneys like New York and some of the other states on the East Coast to do closings, they're a little more open-minded about it, and they understand the legal implications. But you're going to get some pushback, because it's not a usual transaction. Most transactions are seller, buyer gets a loan, there's a realtor involved, and it's just a run-of-the-mill transaction. These are 1 out of every 100 that maybe even fewer that we do as buyers. So most real estate professionals are not familiar with the workings of a subject to.
Yeah, definitely. So, that draws to another thing. Why do you think families would truly consider doing something like this? this process? What do you, I mean, what is
I
some,
just think a seller is just doesn't have any other options.
yeah.
It's just a matter of, do I let it go into foreclosure,
Mhm.
or do I trust someone to make my payment? Maybe they will, maybe they won't. But I mean, how much worse can you get than the property going to foreclosure?
Yeah, yeah, good point. Okay, so let me just throw a scenario. So let's just say all of a sudden someone gets extremely sick, and they're not able to go back to work. They're behind on those payments. I think you had already mentioned, but this could actually, again, save them from even a foreclosure, if we're actually able to help take over those payments, right?
Oh
Something like
yeah, oh yeah, definitely. In today's market, the COVID thing, there's a lot of people who are now deferred 8, 9 payments, and they're going to keep going right through until January, maybe even longer, depending on our new Congress and what they do about stopping foreclosures or halting them. But by the time it doesn't eliminate the payment, it just defers it. So at some point, they're going to have 10, 12, 14 payments to make up, and it's just not realistic that they're going to be able to do that unless the lender is willing to take those payments and do what's called a forbearance and stick them on the back of the loan and let them pay going forward. And in order to do that, you have to show that you can make your payment going forward. And a lot of people aren't employed. So, if you're not employed and making a solid income by that time, you're not going to get a forbearance, and you're going to be stuck with the choice of either making up all your back payments, going with an investor to do it, or letting it go to the bank. And letting it go to the bank is the worst option, especially if you're in a state that doesn't prohibit overage lawsuits. So if you owe $290 on the 300 house with interest and penalties and attorney's fees, you can end up with $330
right.
Owed on a $300,000 house, and if it sells at auction for $250, you're 80 grand in the hole. And some states have anti-deficiency. You can't go after a homeowner, but that doesn't apply to VA, by the way. VA goes after everybody. And most states don't have anti-deficiency, so they can come after you for that 80 grand, which is a liability for the seller that may have to file bankruptcy in addition to having a foreclosure.
Yeah, definitely. Absolutely. Well, what about, this is kind of a touchy feel, but it does happen. What about a divorce? Most of the times, husband and wife, they put a mortgage in both their names.
Yeah.
How would this process work? What's the process on that?
Well, this is actually common in a divorce. People think that subject to is totally, a wild, crazy strategy. But every single day of the week, people get divorced where husband and wife are on a house, and maybe husband moves out and deeds the property over to wife. Husband's still on the mortgage obligation with a promise from the wife that she'll sell or refinance that loan in 3 years. Well, a year and a half in, she loses her job. She doesn't make her payments. The husband now is in a bad situation because he doesn't own the house. He can't take possession back. He can't take ownership back. He's already given it away. And, it's either he makes the payments for her, and in addition to what he's paying to live, or he's going to end up in foreclosure on his credit, just like the wife would. So this is not uncommon at all. That happens every day. Personally, I think attorneys who do that are insanely stupid, because if I was representing husband, I'd say, no way, no how am I going to take my name off of that title until she refinances, and or vice versa.
Right.
It's very foolish to do that. So this is very common. It's not unusual.
Okay. Great. That's really good to hear.
Right.
Okay. So with this process, you definitely convinced many, but how do, let's just say we have that family, we have that person who's, ready to do this, but we want to give them that comfort. We want them to get notification that payments are being made, especially if it's going to be in their name. What are some ways that we could inform the homeowner that, hey, we're making payments on that mortgage?
Well, there's logistical ways to help them, but the reality is, in my experience, is if you tell a seller, don't worry, I'll make your payment, you're just going to create distrust when someone asks that. If someone says to you, how do I know you're going to make my payment? The honest answer is, you don't. So I look them right in the eyes and say, honestly, you don't. But do you have any other options other than this? But, nonetheless, okay, we can set it up online. Almost every mortgage has a website where you can log in and then make an auto draft out of a bank account. So I just put my routing number and my account number, for my LLC that's going to take ownership. And then it's auto drafted, and then they could log in and get emails if there's late or not paid. So that's a safety net to some extent. But if there's no money in my account, it doesn't matter. But things like that, we can set up some feel good measures for the seller.
Okay.
The honest answer is they don't know, and I think the only honest way to answer that objection is to look them straight in the eye and say, well, Mr. Seller, you really don't have any guarantee, but do you have any other options right now?
Yeah, especially what's going on. You're right, definitely, absolutely. Well, I mean, for Bill, one of the things I wanted to tell you is that, everything that you've said has been extremely powerful, and, by far, with the information you share today with our viewers and the many families out there that are in need of help, they are on the verge of losing their homes. I tell you what, I wanted to ask you this. Is it safe to say that my company, Mortgage Resolution Advisors, can help as many families out there with no limits, with your guidance, skills, and expertise in this situation here? And then my partner and I, Margera, who continues to create many home assistance programs, is it possible for us to do this and help as many people as you've done?
Absolutely. There's a lot of people who are going to need your help, my help, and everybody else's help who's doing this. And there's way more people out there who are behind on their mortgages right now in desperate need of a solution than there are people like us with the solution, unfortunately.
Well, I'm very more comfortable now that, hey, you're a part of the team, and I feel a lot better because our mission is to continue to help many families out there that are suffering from these different situations that you brought up. And I just wanted to take this time and, thank you so much for being here and sharing how many, so many people that you've helped out. Because I know you're being modest. I think it's more than 15. I know you've helped more people, but thank you again for sharing this information to everyone today. And I really hope that the families see this as helpful and encouraging. So again, Bill, is there anything additional you'd like to say before I go ahead and close everything?
Well, the most important thing, advice for a homeowner in this scenario is don't do nothing. Do something. Whether it be doing a deal like this with an investor, trying to work with your bank, trying to get a relative to give you money or lend you money to make up the back, do something. Because if you do nothing and you hide your head in the sand like an ostrich, it's not going to go away. The problem gets worse and your credit's going to get messed up. And so, explore your options and try to do something to fix your problem.
And definitely reach out to people who are willing to help. So yeah, definitely, I couldn't agree with you more. Well, Bill, thank you again for your time. And, Bill, again, one of the best-selling authors, his books, I'm definitely going to have listed as down in the descriptions here. But for the most part, continue to subscribe to our YouTube channel. We also are putting very, very good, helpful material on our Facebook page as well. Again, Bill, thank you again. And to everybody, stay safe and be careful. And thank you so much for being here again. Thank you.
My pleasure. My pleasure. Thanks for having me.